In this short video, we're going to talk about inflation, the outlook, but also how that can impact stock markets. You might have heard of him. His name is Andreas Steno, and he used to be FX strategist with Nordea Bank, which is one of Scandinavia's biggest bank. And he's presented a very nice case for inflation coming down. And we all know inflation will come down because the central bank's raising interest rates so much, it's going to cause recession. And that's going to cause demand to come down lower. So how could that impact the markets, right? Well, we're looking here at an episode that he mentions is in 1974, where the S&P here, the blue line, tumbled. And what's interesting is that the market bottomed out exactly when inflation peaked, more or less. And so if he's right in his assessment that inflation is now going to come down, which I think makes a lot of sense, and it's not just him, it's other people as well, then stock markets will bottom out at the same time. So maybe that's what happened here when the market bottomed out. Now, it would have been super easy if it was just like that. But normally, you would actually have the ISM indicator bottoming out at the same time. So this is the ISM indicator. So the ISM indicator was around 60. So it was strong, right? It was strong around 60 when inflation was high. And then the ISM tumbled to 30. And that's when you had your unemployment rate shooting up. So here in 1974, unemployment rate in the US was about 5%. And then it went up to 9%. And I'm finding that really interesting because it would mean that the stock market bottomed out, the economy deteriorated. Whereas usually, and it's perfectly fine that it happens, but usually what I would look at and see is sort of the low in the ISM indicator being roughly the same as the low we had in stock market. So that's going to be super interesting, and maybe that's what we're dealing with here. I don't have any conclusive answers. The charts, like buying the Dow Jones right here, right now, doesn't make too much sense. Maybe one could potentially look to buy it at the lower ends of this channel, so around 20,650, or maybe down here, for example, if we drop here to 27,980 in the Dow Jones. Me personally, I think though that we probably going to see more weakness. Okay, I think we are going to see that in unemployment rate rise, and we are going to see pain. So I don't really see exactly how people are going to go out and buy, at least not right now, because the S&P, I would argue, is a bit different now than in 1974. I would guess that in 1974 it was something exclusively to the elites, which of course when you have an economic drawdown are affected, but it's not that they go and are hungry. Whereas now the masses are much more involved. So I'm not really believing or thinking, at least not just yet, that we are going to bottom out exactly when inflation peaked, which it looks to have done now. What do you think is going to happen with inflation? How should we be trading on the back of this information? Leave your comments below.